Hello ladies and gentlemen, my name is Greg Michalowski from ForexLive.com, and this is the morning report for August 5th, 2022. Unemployment in the U.S. soared with an addition of 528,000 jobs. The unemployment rate dipped to 3.5% from 3.6%. Average hourly earnings were higher than expected at 0.5% versus 0.3%. The average work week also moved higher at 34.6 hours versus 34.5 hours expected. We're seeing U.S. stocks move down with the NASDAQ index minus 133 points in pre-market trading. The Dow Industrial Average is minus 135 points, and the S&P is shed minus 30 points in pre-market trading. We're seeing U.S. yields move higher. Looking at the 2-year yield, it is currently trading at 3.207%, up 16 basis points. The 10-year is up 9.6 basis points at 2.78%, and the 30-year is up back above the 3% level at 3.02%, plus 5.2 basis points. Can't deny the stronger report here, and market is reacting in the forex market with the dollar moving sharply to the upside, following the yields to the upside. Well, I say sharply to the upside. It's, looking at the euro versus US dollar, we still remain in the trading range here, but we shifted the bias back to the downside, falling below the 100 and 200 hour moving averages. Are you familiar with that phrase? That's been happening all through this 15-day period where the price has moved up and down, up and down, up and down, with the 100 and 200 hour moving averages sort of moving in between the two extremes at the top and at the bottom. So the pattern remains the same for the euro versus US dollar, but we're just below those moving average levels, and as long as the price remains below those moving averages, the bias remains to the downside. Support at 1.0144 to 1.01509, a swing area. Then we start to look toward this swing area between 1.0114 and 1.0121, and then we start to look at the low price over this 15-day period at 1.0096. So that's the bias. We move back above the 100-hour moving average. Throw up my hands and wonder what's going on, but that would tilt the bias more to the upside. We saw the high price yesterday stall near the swing area up here at 102.57 area, swing highs, and so on and so forth. That was a level ahead of the 50% retracement at the top. Let's take a look at the dollar versus yen. This tends to react mostly with the U.S. rates, and it is moving to a new high for the week, and looking to take out, I guess these are last Friday's highs. 1, 2, 3, 4, 5. Yes, last Friday's highs, and also looking to approach the 61.8% retracement of the last move to the downside here, 134.785. Above that level, I'm going to look for 135.16 and start to look up toward these highs up here near 135.85 to 91. The risk here is the 200-hour moving average. Price moved above the 200-hour moving average for the first time since July 21. So as long as the price remains above the 200-hour moving average, the bias to the upside remains for the dollar versus yen. Let's look at the pound versus US dollar. And this pair traded above and below the 200-hour moving average up to the employment data, and then rotated to the downside. We are taking out the lows from the last Friday and from this week, which came in near the 120.61 and currently trading at 120.51. Best case scenario for the shorts is to stay below that level, but we could see a bounce back above that level before rotating back to the downside. I would probably think that traders might use this area right here, high, and maybe even up to this area through here, which is a low and a low. So this swing area between 120.85 and 120.98 as a resistance level on the top side for the pound versus US dollar. Dollar versus Swiss back up, testing the 100-day moving average. That 100-day moving average comes in at 0.96229. Recall from 2 days ago, the price moved above that level and then started to rotate to the downside and trading yesterday. Traders use the 100-day moving average as resistance, push the price below the 200 and 100-hour moving averages, and in trading today, the low from the Asian session was held in the London morning session, and those dip buyers against this support level through here were rewarded with a stronger number and a big, huge move back up to the 100-day moving average. If we're able to get above the 100-day moving average, we'll look toward this swing area up at 0.9652 up to 0.9657 for that currency pair. Finally, we'll take a look at the dollar versus Canada. That country had their second consecutive employment change to the downside. So I guess jobs coming to the United States and out of Canada. I don't know. But anyway, if you take a look at this high price going back to July 25th, the market is just trying to break through that high on its way to. Let me spread this out a little bit, give us a broader view, but it gets us out of this range here, or out of this ceiling area here, and opens the door for further upside for the dollar versus Canada. The also breaking the 38.2% retracement of this move to the downside. So positive for the dollar versus Canada if it can keep its momentum to the upside going. Close risk would be this 129.26 level. It's about 20 pips away. So for traders, it might be a level to lean against if they for the price to move higher. I guess it's 129.28. 28? Can't see. Anyway, gotta put my glasses on. Anyway, more bullish bias here for the dollar versus Canada as the U.S. jobs report is strong, Canada job report is weak. My name is Greg Michalowski. I hope this helped you. Sets the stage for today's trading. Good fortune with your trading. Bye-bye now.